Hello students, I am Vipul Mittal. In this session, I will discuss a question on property, plant and equipment. A long-lived asset or a disposal group classified as held for sale should be measured and reported at what amount? So a long-lived asset, for example, property, plant and equipment, may be classified as held and used or held for sale. So a long-lived asset may be classified as held and used or held for sale. Now, the general classification is held and used, but you classify a long-lived asset as held for sale if certain conditions are met. So a long-lived asset or a group of assets that is to be sold should be classified as held for sale if certain conditions are met. If those conditions are not met, you classify it as held and used. Now, a long-lived asset or a disposal group that is classified as held for sale should be measured and reported at what amount? All right. So a long-lived asset or disposal group that is classified as held for sale should be measured at the lower of its carrying amount or fair value less cost to sell. That's the rule. Lower of the carrying amount or fair value less cost to sell. So you do not report this asset or asset group at the carrying amount. You do not report it at fair value less cost to sell, but you report it at the lower of its carrying amount or fair value less cost to sell. You do not report it at the higher of its carrying amount or fair value less cost to sell. So measuring and reporting a long-lived asset or a disposal group that is classified as held for sale is simple. Report it at the lower of its carrying amount or fair value less cost to sell. For example, you plan to sell an asset and this asset has a carrying amount of, let's say, $80,000. This asset has a fair value of $45,000. You will also incur some cost to sell this asset. So you will incur some brokerage fees or legal fees when you sell this asset. So let's say the cost to sell is $3,000. So fair value minus cost to sell is $42,000. And you report this asset that is classified as held for sale at lower of carrying amount or fair value minus cost to sell. So you report it at lower of $80,000 or $42,000. And $42,000 is the lower figure. So you report it at $42,000, but its carrying amount is $80,000. So you report a loss on classification. So there is a loss on classification. Because you have classified this as held for sale, there is a loss. And this loss is carrying amount minus fair value minus cost to sell. You are reporting it at $42,000. Its carrying amount is $80,000. You report a loss, $38,000. You record this loss. Loss on classification debit, $38,000. And you reduce the value of the asset and bring it down to $42,000. You reduce the asset by $38,000. So an asset or a disposal group that is classified as held for sale should be measured and reported at the lower of its carrying amount or fair value less cost to sell. All right, students, I hope this session is helpful. We'll connect again. Take care.